The VIX just woke up, 15.19, a 6.6% jump, after 2 weeks of playing dead, and it did it on a day the market barely moved. That's the tell going into this week's Fed Minutes. I'm Max Sterling. This is your StockStory market ritual, for minutes, the numbers, and what they're hiding. Here's the stakes question: what happens when the bond market repricing collides with an equity market that's been priced for perfection? The 30-year Treasury yield just topped 5.31%, the highest in 19 years. Stocks are sitting near records. Those two things cannot both be right forever. So who's wrong, the bond desk demanding more yield to hold long paper, or the equity crowd still paying up for AI and oil? Retail earnings land this week, the Fed minutes drop, and the answer starts getting written. Today was the market flinching first. Look at the tape. The S&P slipped 0.52% to 7,745.06. The Dow gave back 0.51%, down to 53,459.78. The Nasdaq held up best, off just 0.32% at 26,644.91. Narrow damage, but damage. And underneath it, the rotation told the real story. Energy led again, up 1.08%, as the Strait of Hormuz tightened and the Iran ceasefire ran out of road. Technology eked out 0.16%. Everything defensive got sold, consumer staples down 1.64%, consumer discretionary off 1.23%, and communication services the worst of the bunch at down 1.89%. The single most important number wasn't an index at all, it was the VIX, up 6.6% while stocks fell less than 1%. Fear repriced faster than price did. That's the market quietly buying insurance it swore last week it didn't need. Now, the scoreboard. No calls came due today, nothing to grade, no hit to take a bow on, no miss to eat. So the running record stands exactly where it was, 16-23. I'm still underwater, and I'm not going to dress that up. The book has been unkind because I kept betting the VIX would wake up, and it kept hitting the snooze button. Today it finally stirred. We'll see if it means anything. Here's my read. The complacency trade we've tracked all week, VIX asleep under 15, breadth carried by a handful of chip and oil names, just took its first real crack. A 6.6% pop off a 15 handle isn't panic, but it's the first day in 2 weeks the hedgers moved before the sellers did. Pair that with a 19-year high in the long yield and defensives getting dumped, and you don't have a crash setup, you have a market that stopped believing rates are coming down soon. What I'm watching, whether energy leadership is real strength or just a geopolitical bid that unwinds the second Hormuz calms down. I'd rather own the boring cash flow names than chase the oil headline. So here's tomorrow's call, logged before the Fed minutes hit. I think the VIX holds above 15 and doesn't melt back under it. Complacency doesn't die in one day, but it stopped getting cheaper today. Come back and grade me. Same time tomorrow. Subscribe so the ritual finds you.